Hi there. You keeping your money in a bank account is costing you big time. And I'm saying so because there are better alternatives which you could explore for you to be able to see your money grow. Is what I want us to talk about. And I'm extremely excited because, guys, I was crunching through some numbers which were released sometime mid this year by the Central Bank of Kenya, which showed interest rates across the different offerings from 1991 to the year 2026. And that is what I want to discuss with you because, as you know, I'm typically excited about data, and data never lies. Just to give you an example, right? 1991 comparison versus mid-2026 comparison. When it comes to different areas with interest rates, we're talking about deposit rates, savings rates, lending rates, and also overdraft rates, right? Mid-2026 deposit rate, for example, was 6.84%. Okay? Savings rate was 3.32%. Lending rate was 14.38%. And overdraft was 12.98%. So, what I want us to talk about is why the deposit rate and savings rate have drastically dropped over the years. And I'm saying so because, in case you just compare, in 1991, right, deposit rate in the banks was 13.5%. Come 2026, deposit rate is 6.84%, has dropped by about 50%. Okay? Savings rate was 13.2% in 1991. Mid-2026 is 3.32%. Savings rate has also dropped, and you're talking about a drop of over 70%, right? Simply put, you having your money in the bank account is actually costing you more, whereas the banks are continuing business as usual when it comes to lending and also overdraft. Let's talk about that in this video. In case you are new here, my name is Afagzaz Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Click the button and consider subscribing to my channel for you not to miss out these amazing videos I upload each and every day. And while you still at it, drop a like on this video. Having said that, what is happening with this data is a very big story, right? And the big story is that savings have fallen, and they have fallen big time. Just to give you a comparison on how they have fallen. In 1991, savings rate was 13.2%. Okay? Come 2000, it had dropped to 4.9%. Okay? About 2020, the savings rate had dropped to 3.9%. And in 2026, it dropped to 3.2%. That tells you banks are paying way less for people saving money, and also the story is the same when you look at the deposits. Because when you look at the deposits, 1991, interest on deposits was 13.6%. Come 2000, it was 7.3%. 2020, it was 6.7%, right? Right now, it's around the same range. It's 6.9% thereabout. This tells you that banks are actually paying low amount on people's efforts around depositing money with them in fixed deposit accounts and also just holding money in the savings account. Okay? And then when you look at what is happening on the lending rates has somewhat been stable. Of course, there's been spikes here and there. Case in point, in mid-1990s, when Kenya was going through some serious cash crunch as a country, even interest rates did hit 30%. But of course, they've just been stabilizing there around 14% to about 20-something% over the years. Simply put, the cost of accessing financing has somewhat continuously been quite on the high end in the country. So the real question is, given you've seen that holding money in savings accounts and also deposit accounts is giving very low rates, because deposits is 6-something%. You having it in savings account, assuming it's there for the entire year, is going to give you around 3-something%. What instead are you supposed to do with your money, right? Because what I believe is that at the end of the day, your money needs to also work for you. You shouldn't just be working extremely hard and then having money in a given account which is not giving you an attractive return. Instead, have alternatives where your money can be able to grow at a much faster rate. And I'm saying so because when I look at it objectively, the returns on deposits are actually negligible, and then the return on savings, its net effect is negative. And I'm saying so because right now as a country, we are talking about inflation, average annual inflation being 6 point something percent. So if inflation is 6 point something percent, the interest on your savings is 3 point something percent. Your net effect is actually negative 3 point something percent. Okay? That is how your money is losing value in case you're just having it there in your savings account. So the best deal you can do is for you to look for alternatives which actually have a higher rate than inflation in the economy. That way, your net effect come the end of 1 year holding is going to be on the positive side. That is what actually we need to be aiming for us to ensure that our money is working for us. Starting point, what do you need to do in the short term? Okay? In the short term, unfortunately, you have expenses which you are incurring, okay? You have things like, for example, rent, school fees, etc. So it is important to cater for that. Which pots can you use to hold the monies for the short term? The monies for the short term can be held through, for example, of course, bank savings account, because either way, you are withdrawing in a short span of time. Secondly, you can utilize high interest savings accounts in cases, for example, the quarterly or even biannually, those fixed accounts which are attracting a given percentage return on your money instead of your money having no return. And also, money market funds can be a good source for you to be able to put your money in money market funds so that you are able to retrieve with ease, because you can access maybe even in 48 hours if you need to access. Okay? And then in midterm, out here, people are looking to have, for example, do deposit for houses. They are thinking about business expansion. They are thinking about fees several years from now and so forth. Given that's the case and reality for most people out there, some pots which you could utilize for you to be able to see your money grow a bit instead of having it in savings account is maybe thinking about you actually utilizing, for example, fixed deposits, right? And aim for those fixed deposits which have quite a high rate. Because the beautiful thing with fixed deposits, rates are typically discussed upon upfront, and banks typically try to honor the rates which you discussed upon. Secondly, think about treasury bills, right? Treasury bills, treasury bonds, etc. fall under the asset class called fixed incomes, right? So these are also good. Treasury bills, treasury bonds, for you to jump on and be able to benefit from fixed income of your investment. And I'm saying so because, guys, over the past 1 year, we've seen, for example, return on treasury bills per annual return being much higher than actually the interest you probably getting on savings account and even deposit. So thinking about these fixed income options is a better alternative for you instead of having money sitting idle in a bank account, okay? And then the long term, out people are thinking about building wealth, right? They are thinking about everything on their basic end is thriving, and even their money is multiplying. That is why you could think about options like, for example, the Kenyan equities. Simply put, think about investing in the stock market, because there are those stocks which have shown that year in, year out, they are seeing their price appreciate, and also investors are getting dividends. And just to give you an example, right? Over the past 1 year, the Kenyan stock market has seen increase in value by upwards of 50%. That tells you, in case you had money in the stock market, right, you'll have gotten more than 5 times what you'll have gotten, for example, by having money sitting idle in a fixed account, or even you'll have gotten more than 10 times you having money sitting in a savings account. That is a better alternative instead of you holding money idle in a savings account. And the other alternative could also be you thinking about long-term government securities, like, for example, the bonds, okay? You also thinking about real estate, because we are talking about yields on real estate property typically being higher than the interest you can make of a saving account, okay? And even beyond that, also think globally, because also globally we have ETFs, we have different international funds, and even diversified global portfolios, which could look to tap into for you to be able to spread your risk on your investment and see your investment grow over time. The important lesson I want you to take away from this is that you having money sitting idle in the bank account won't really help you that much. And there is alternatives out there which you could explore for you to be able to see your money grow at a higher rate. Because, as I've said, it is important for you to beat inflation each and every year for you to have the net effect of your money being positive. Cheers, guys. and you all stay safe.